Hello and welcome to a new edition of Merrill's Monday Morning Market Madness. I'm coming at you with an update for the Phoenix area residential housing market. And I wanted to speak specifically today about kind of the 2022 year in review and just kind of using some historical data to talk about what all of this might mean for looking forward. What do I anticipate will happen with the housing market in the Phoenix area in 2023? And hopefully, if you're having any thoughts of moving in the year of 2023, my hope is to arm you with some good scientific data and metrics to help you understand. Where you stand and what you might be facing in 2023. So let's just start by looking at what is the snapshot for what's happening in the market right now. So the number of active listings in our MLS is currently at 16,488. Pending, there are 5,796, and we have had 4,414 homes close in the last 30 days, giving us a month's supply of inventory of 3.74. Meaning, if no new homes came on the market, if we continued selling homes at the pace of 4,414 homes every 30 days, we would expect everything to be sold in 3.74 months. Now, to give that some perspective, we consider a balanced market to have somewhere between 4 and 5 months supply of inventory. And a buyer's market would have greater than 5 months supply, and a seller's market would have 3 or less months supply. So we're 3.74 means we're pretty darn close to a balanced market right now. Of course, we're actually seeing home values declining right now, and I'll get more into that in a minute. But in terms of like the amount of inventory we have on our market right now at 16,488, it's actually relatively low given the population of the Phoenix area and given historically where we've been. In the crash of 2008, 2009, at one point we had as many as in the 40 and 50,000 range of active listings on the market at a given time. So 16,488. If we get back to the point where we're selling at 8,000 homes a month, that's really only a 2-month supply, which is still extremely low. So I guess what I'm trying to say is inventory is still low. The number of people who are selling their home right now is, not high enough to support, any substantial, population growth or even like we'll see what happens. But if interest rates go down and demand increases back to, let's call it a normal level. Right now, demand is lower than normal. But if demand were to increase to a, relatively healthy levels of, let's call it, where we're selling anywhere between 7,000 and 9,000 homes in a given month, which I do think might happen in the spring, especially if interest rates come back down into the 5s, which is looking like will probably happen. Then we could see inventory really start to decline, and we could see home prices start to increase again. I don't think anyone is predicting home values to spike by 20% a year like we were seeing in 2020 and 2021 and part of 2022. But I wouldn't be surprised if year over year, we actually see a slight increase in values. Now, that probably won't happen right away. We might see home values decrease a little bit more over the next couple of months as affordability continues to be a strong factor. But I wanted to just kind of go over, like, what did we see for the entire year of 2022? Let's just kind of do a year in review. What happened in the housing market in 2022, and how does that compare to previous years? So in 2022, we saw a total number of closings in our MLS at 85,834. 85,000 homes sold. The average price of all the homes that sold in 2022 was $561,000. Now, compare that to 2021. There were 110,000 homes sold. So 2022 actually saw 25,000 fewer closings than 2021 saw. And the average, but here's the interesting part. So the average sales price in 2022 again was $561,000. The average sales price in 2021 was $494,000. So despite the slowdown in the market, despite the decrease in values that we saw in 2022, the average sales price still ended up being $65,000 higher than it had been in 2021. So still significantly higher, although I'd like to add this, right? A lot of the volume that we saw in 2022 happened in the first half of the year. And that is probably increasing the average sales price. In fact, the highest average sales price that we saw for any given 30-day period in 2022 was actually 602,000. So we hit 602,000. The average sales price for what we've seen over the past 30 days is currently sitting at, where did I write it down? It's sitting at 516,000. So we've actually seen a decrease in the average sales price from its peak. So we hit our peak average sales price back in May of 602,000. It's now sitting at 516. So a decrease from our peak of $86,000. So average prices have come down from their peak of almost 100,000. But year over year, again, if you look at what was the average price in 2021 compared to 2022, it's actually still substantially higher by $65,000 higher. But let's go back to the total number of units. So again, we saw 85,000 closings in 2022. Compare that to 2021, there was 110,000 closings. 2020, there were 105,000 closings. 2019, there were 99,000 closings. 2018, there were 96,000 closings. So by far the fewest number of closings that we've seen over the previous 5-year period. In fact, if we go back to 2017, there were 96,000. 2016, there were 89,000. 2015 was the last time that we saw a total number of closings lower than where we were at in 2022. 2015, there were 84,000 closings. And again, 2022, there were 85,000 closings. So the point I'm trying to make here is, again, we did see, pretty significant drop in the total number of closings, a pretty significant increase in the amount of inventory on the market. But again, still 16,000 active listings is not that many given the size and population and demand of Phoenix. In fact, if the market heats up to the hottest levels where we were selling 10 and 11,000 homes a month, that inventory could be gone like that. I mean, it could be gone super, super fast. Interest rates right now, average interest rate on a 30-year fixed rate mortgage is currently at 6.28%. So that undoubtedly is the biggest impact. A lot of people just choosing not to move or to continue renting, or affordability. It's very hard to afford the monthly payment. If you don't have a big down payment and you're trying to buy the average home at $516,000, if you only have, let's say, 5% down, so you're putting $25,000 down, you're financing almost a $500,000 purchase price at a 6% rate. Well, I didn't run those numbers beforehand, but the monthly payment is well over $3,000 a month. And it's just a monthly payment that a lot of people feel like they can't currently afford. So affordability remains a factor, and that's at the moment currently putting downward pressure on home prices. In fact, not only has the average sales price dropped from 602 to 516,000, right now we're seeing somewhere around half of all the homes that are selling are actually paying concessions to the buyer, contributing money towards the buyer's closing costs or rate buy downs. And the average amount of concessions is $9,000. So not only have prices dropped by $86,000, the seller's also giving an additional $9,000 on top of that in concessions towards the buyer. So pretty significant. The last number is the current listing success rate. So meaning of all the homes that are coming on the market, the only 61% of them are successfully selling, and 39% of them are canceling or expiring or coming off the market. So we are seeing a lot of frustrated sellers out there right now, people who are trying to sell their home and they're not able to do so successfully because, people aren't willing to give them their price. So, the interesting thing though, is there's a lot of sellers who would like to sell, but don't have to, right? And so a lot of people who are in that situation are choosing to stay put. I mean, think about it like this. If you had your current home and it was financed at 2.75%, and you're faced with the idea of selling that house and buying a new house at 6%, I'm sure you would like an extra bedroom, or maybe you'd like to move to a 1-story, but the pain of whatever it is that you don't love in your current house is not great enough to walk away from that 2.75% rate, especially if you have to sell your house at a much lower price. So there's sellers who of the 16,488 homes we currently have on the market, how many of those sellers have to sell, right? And that's why we're seeing prices, yeah, they're coming down, but they're not plummeting, right? Because there are a lot of sellers out there who don't absolutely have to sell, and they're remaining firm on their prices and not negotiating as much as buyers want them to negotiate. But ultimately, I really do believe that 2023, what we're going to see is home values will actually increase slightly. I wouldn't be surprised if at the end of the year over year, we look and we see the average sales price rose by 3 or 4%. But mostly it'll be pretty flat. The amount of inventory is low enough that sellers can still sell and hold steady on their prices. I believe that interest rates will fall slightly, and that will improve affordability. So yeah, kind of combining all of those factors, I think we're going to see a relatively flat to slightly increasing prices this year. So anyway, I hope you found this information helpful. If you're ever curious, you want to know more about the value of your home, or you want to know more about what your home might rent for, or you want to know more about what's going on in your neighborhood. Just yesterday, I had a client who wanted to know specifically, hey, what's going on in this specific neighborhood, in this specific town? And so I ran the numbers. This is how many homes are selling each month in that neighborhood. Here's what the average sales price was in that neighborhood month over month. This particular neighborhood ended up being a retirement community. And what we found was, interestingly, we haven't seen a significant reduction in home values in that neighborhood so far, possibly because in retirement communities, you have a higher percentage of cash buyers. So it was interesting. I might do a study on that and see whether retirement neighborhoods are maintaining their values currently better than non-55 plus neighborhoods. But it's all interesting stuff, and I love researching those types of things. So don't ever feel like you're inconveniencing me or bothering me when you ask, hey, could you run some numbers, or could you check on this for me? Because it's something that I really enjoy doing. And if you'd like to see me discuss a specific topic on a future show, I would love to take requests on that as well. So please feel free to message me those as well. Anyway, I hope you all have a great day, great week, great month. And let me know if I can do anything to help. Have a great day.